Hey folks, Dan Frio here, the rate update. Today is December 21st, 2021. What's going on with mortgage rates? Well, what's going on with the Omicron? That's the question. So don't go away. We're going to talk about that in the markets next. First thing, I need your help. If you would, please don't forget to give me a thumbs up. Subscribe. Please subscribe. We're trying to hit 19,000 subscribers by year end. Only you guys can help me there. And hit the bell so every time I post a video, you get an alert. So what's going on in the markets this morning? Well, headlines are saying this. I'll get my head out of the way. And the road back barometer. New data shows early Omicron impact on economy. So let's see what the mainstream media has to say about this. And we'll be right back.
These are early days for the economic effects of the latest wave to show up, even in the high-frequency data, but we are seeing the leading edge of what could grow into bigger economic impacts, depending upon how different industries, governments, and regions, and, of course, individuals react. That's going to be a key. TSA passenger traffic begun to edge down, now stands 18% below the level for the same weekday in 2019. Consumer spending measured by J.P. Morgan Chase is above the level of the prior 2 years, but it's trailed off and stands 2 points below the level of spending relative to the day before Thanksgiving, a key holiday spending metric. But the Jefferies U.S. Economic Activity Index, not picking up enough weakness across the entire economy, continues to rise. And we'll take a look at that more in depth in just a second. As of Thanksgiving, air traffic had recovered to the point where it stood just 10% below 2019, but the 7-day average calculated by CNBC slipped slowly since and is now 18% down, as some travelers, maybe the international ones Becky was talking about the last hour, have had second thoughts. The U.S. was off to a strong start on holiday spending, but it soon began to lag behind post-Thanksgiving increases seen in 2020 and 2019. It remains to be seen if there's a final surge into Christmas. There could be, but that white line is below the blue and the red lines right now. And I love this chart. The Jefferies Index, it's up. It shows the big drop came with the onset of the virus of the spring of 2020. That's the big V on your left. Move to the middle, a shallower drop with the outbreak last winter. And you move to the right there, the shallowest of all was the Delta outbreak in the summer. Maybe this next wave will also be shallower still. The hope is that the trend continues. The current wave has the least effect of all so far. One key, whether that shows up in the jobs data. Employers, remember, they've struggled to find workers. They might be reluctant to let them go, and that could lessen the economic impacts. Joe, also, I think individuals, some might be willing, who are vaccinated, with the anecdotal evidence that Omicron has really very minor effects, may be willing to take more risks than they did, say, back in those other outbreaks.
Okay, so the frustrating thing on all this is a lot of the economics, a lot of the fundamentals are out of the industry right now. I've never really seen it to this extent, where the economy and everything is dependent on what the Federal Reserve is going to do and the government's going to do. Between the stimulus and the this and the that, they're pumping so much money into the system. That's why we have inflation. Okay, but they've kept rates down low, and it's helped us all out, honestly. So that being said, why is the Omicron going to create issues? Well, if it has a huge impact, that actually might be good for things. Because why? Well, the Federal Reserve might step in and say, we're going to hold off our taper. I don't think that's going to happen. The government might start printing more money and everything. Guys, it's a short-term fix. It might fix things in the next 3-6 months. In the long run, we keep digging a bigger hole. So that's my analogy on a lot of this stuff. I don't mean to offend anybody. That's just what's happening. So let's get on to what's going on with the markets right now, and especially the headline news. So the economic calendar for today is basically blank. The only thing that was happening today is a 20-year bond auction. That's at noon. That might play a little bit of a role in what happens today. Usually the 20-year bond has a slight little adjustment with things in the markets. But the next thing is, let's go and see where mortgage rates opened today, which means where they closed yesterday. And I'm going to go right across the top and go through this real quick with you to explain these numbers. So the first thing you see at the top left is the 30-year, it says FRM, fixed rate mortgage. Today's rate's 3.17. Yesterday is 3.16. That means it's up 1.01. We say that's 1 basis point. Okay, so these are not my rates. These are the national average. You might have a rate that's a little higher than this. You might have a rate that's a little lower than this. What can affect that? There's multiple things that can affect that, and those are your credit score, your house value, your loan amount, your term, if you're cashing out or not, what kind of property it is. There's a lot of pieces of that puzzle that affect the mortgage rate. So there might be a reason for it. What we want to focus in on is what is your specific. Why do you have the rate you have, and why are you paying the fees that you have? So if you're in the mortgage process right now, I ask you to do this. I'm now joined the largest mortgage brokerage in the country. We have over 130 lenders. What we do for you guys, you send me your loan estimate. I'm going to shop it all over the country, over 130 lenders for you guys. And I'll get back with you. Give me a couple hours, and I'll get back with you and say, here's what I can do. You might have the best rate in town. God bless you. I'll say, you know what you got is fantastic. But can we maybe save you on the rate? Can we maybe save you on fees? We're averaging about $3,000 to $4,000 savings in closing costs. Think of that. And if we can even get you a 0.1 or 0.2 lower in rate, think how much money you're going to save over the life of the loan there. Okay, so that's enough of that. So let's continue with the mortgage rates where they are. So then you have the 15-year. It's at 2.53. Yesterday it was 2.52. The adjustment there is up 1 basis point. Next one is the FHA. I'm going to say FHA/VA, 275, it's flat. No change from the day before. The jumbo's 308, it's up 1 basis point. And the 5-year ARM, volatile as all get out, it is down 35 basis points to 3.02. So now 3.02 is lower than the 30-year fix at 317. Would I do that? Nope. Why? There's not a big enough spread, because after 5 years, this rate's going to start adjusting. Where are rates going to be 5 years from now? I can almost assure you they're not going to be 3. Okay, so I still would not take the 5-year ARM. Okay, so that's where mortgage rates are. What change are we seeing so far today? We follow the MBS market. I'm trying to do a video on explaining to you guys what the 2.5 coupon means. Basically, let's just say this is the closest, this rate right here, or yield, that's the closest we are to where mortgage rates are right now. Usually it's give or take a half a basis point or a half a percent. As you can see where rates are right now, rates on the 30-year fixed, or let's go to the 15-year fixed, 2.53. Well, it's too confusing, so I'll break it down in common sense for you. I'm working on that, I promise you, but it's not as easy to explain without completely confusing everybody. So what we monitor here, why people follow me, is what's your prediction on mortgage rates? I've done this over 33 years. I get a feel. I've been through 3 or 4 crashes. I've been through 3 or 4 rallies. Okay, so I have a fundamental idea of what's going on in the markets. Okay, so that's why I post my comments every day. So here's what's going on with the MBS market for the last quarter. Well, what is the MBS market? It's a mortgage-backed security bond that trades on Wall Street. It is the biggest factor determinant in your mortgage rate, period. I'll leave it at that. Okay, this number right here it's down 8 ticks, or 8 basis points. When it's red, it's down. What happens when the price of the bond, and this is what's going on, the price of that bond, when the price of the bond goes down, what do we all know? Mortgage rates go up. Any bond, when the price goes down, the yield or the rate goes up. Okay, so that's why we focus on this piece here. So this is where we've been for the last quarter. It's all over the map. And again, remember, down in price means up in rate. Down in price means up in rate. So these were basically crashes in the market that pumped up rates. And you can see the last time this happened, back in October, we rallied. Okay, then we plummeted. Now, are we going to rally again? I don't think so, because I think unless the Omicron virus really plays havoc on the markets, and it's that time of year too, it's December, January-ish, where a lot of people get the flu anyways. A lot of people are going to be a little skittish. They might get the flu and think, oh my goodness, I have the Omicron. So there's a lot of uncertainty in the markets right now. So that's why you've seen, I feel that's why you've seen the stock market kind of up and down and up and down, because there's uncertainty. And a lot of people they're reluctant, even myself. I'm a little reluctant on the stock market right now, so I'm moving some money into secured assets, such as bonds. The intraday chart, what's it looking like right now? Well, we had a plummet out of the gate, and then we started rallying a little bit, but we're still down on the day. There's really no economic news out today that should affect this other than the Omicron, and you heard Steve Leisman talk about that earlier. So if you like my videos, that's all I'm going to talk about today. The morning videos that I do, I just talk about where rates opened, what the economic news is for the day and the rest of the week, and what my thoughts are. So if you're in the process of a mortgage, please just email us the loan estimate that I asked you about. The loan estimate goes over. So let me explain this. If you're in the mortgage process right now, within 3 days of pulling your credit, your lender has to send you what's called a loan estimate. Okay, that loan estimate goes over the house value, the loan amount, and where every penny of that mortgage is going. A lot of people are saying, Dan, that's unethical. Why? When you shop for a car, you shop around. When you shop for a TV, you shop around. This is the easiest way for you to shop around. Now, the next thing is there information on that LE that is really personal? No. It's your name, your address, public knowledge, doesn't have your credit score, doesn't have your social security number, doesn't have anything on there. It just gives me the fundamentals of a bunch of numbers. If somebody steals that, what can they do with it? Nothing, okay? So that's that. If you're in a forbearance or just getting out of forbearance, please call us. You're probably, if you haven't yet, you're probably freaking out, okay? How do you get out of the exit strategy? Is modifying your loan with the lender your best option? Probably not. And if you call us, I'll explain why. If you're in the process right now, we have a lot of people doing what's called a cash out refinance, getting rid of a lot of credit card bills that they accumulated over the coronavirus pandemic time period because they might have had to live on some credit cards. So we're doing a lot of cash out refinances, and a lot of people are doing a lot of home improvement loans. So if you're out there and you're looking, if there's a mortgage out there that you're thinking, hey, I can really maybe use that, call us and we'll explain to you exactly what it is, why it might be the best option for you, or there might be another better option. So that's it for today, guys. I'll do a video later this afternoon talking about how do you prepare for the 2022 housing market if you're looking to buy in 2022. So thanks so much for watching. If you'd like to reach out to me and my team, please go to the rate update right here, therateupdate.com. There's the website. There's multiple ways to get a hold of us. You can apply online easily if you want. Just click the apply now button. Okay, it's right there. But what I like people to do is we want to know you. Your situation is unique. What is different about it? How do we walk you through this? What programs available to you that you should be maybe looking into? That's why we really like you to call. Give us a call at 844-775-5626 or schedule a meeting with us. It's right here. You just click that button. It's going to open up a calendar. You pick the day and times that's available there, and then just let us know. Do you want to do it by Zoom or do you want to do it by phone call? We'd love to answer any and all questions that you have because, again, your mortgage and your scenario is unique to you. So thanks for watching, guys. Please don't forget to give me a thumbs up. Subscribe down below. We need to hit 19,000 subscribers. And click the bell. Every time I post a video, you get an alert. I'll see you later this afternoon. Take care. Bye-bye.